And by the way, I mean I think whatever it is, Economic Bureau research, the people that track GDP for the U.S. have tests underway where they're testing other pieces of measuring quality of the economy. So
who will pay attention?
Well, if we're all telling the new story, then we all are paying attention. We all have to start having a new language that we share, and then it kind of trickles into the economists and Wall Street bankers.
See, the financial value is going to define, the money's going to devalue, but the social currency will not. And it'll become now the dominant currency. If you lose all your money, first thing you do is go shake your neighbor's hand and say, what do you do? And that's what's going to happen, and then that's when the building blocks are going to be in place, and it'll be different.
So that gets back to, we were talking about reputation, that ultimately, you know, if you're BP, you know, all the money that you made in prior years is meaningless when you violate and you show that you've managed your intangible capital poorly and you create a crisis. So we'll try real fast to get around to the...
Yeah, I actually just wanted to address your question earlier about VCs and where the tipping point might be. So impact investors tend to look at intangible assets as the precursors for future productive, financially productive assets, as well as sometimes not productive assets. Sometimes they stay in their own domain. But if you distinguish between speculators who just run up the bubble because, hey, the market cap is 200 billion and I want some of that too, it's a gambling situation, versus investors. Investors tend to see the long-term time horizons, and impact investors in particular with a longer-term time horizon are starting to see how intangible asset valuation changes the way that they look at their portfolio. And then my question, can you talk about intangible liabilities a little bit and maybe risk valuation, how that all plays into this space as well?
I'll make some comments about both of those, and I just want to, for the sake of the recording.
That's fine. Well, just, yeah, for the sake of the recording.
For the sake of the recording, repeat what you were saying is that social, what I call social influence investors will look at maybe in worldviews, look at a larger system than just the money system and look at the health of the system of an enterprise where cash dollars are going in, and recognizing that the cash dollar return will be more enhanced when you're investing in a healthy system that incorporates externalities into the model. I.e., if you have workers that are happier, that have paid work days, and there's happy mothers, and the food is better, all those things that are intangibles, well, those things actually create a more productive workforce in a dollar sense. And then back to what your question of, you were asking about intangible liabilities. It's the issue of what I was speaking to earlier in a broad, publicly traded sense of companies that are not necessarily incorporating in resource scarcity or energy pricing or biodiversity loss in products and services that they're using. A lot of those things are not being seen by the current or by the operators that are just looking at the current economic paradigm, but the operators that have a larger view that are seeing these larger systems are being able to recognize that the liabilities that exist and adjusting their enterprises accordingly. Take, for example, a very blunt example of like Toyota recognized the possibility of rising gas prices and made all these energy efficient cars where GM did not. Well, look what happened to GM and look what happened to Toyota, at least in that period of time. So companies and enterprises that recognizing larger systems and can create business opportunities by that recognition are going to succeed better in the cash economy.
So you here in the center, you've given up? Yeah.
I was listening and digesting.
Okay.
I just think that in reference to this conversation about kind of technology's impact on, say, the revolutions that are going on in North Africa, I think it's unfair to say that it's technology that created those revolutions rather than 30 years of people's movements on the ground, and that those social relationships that were built up technology helped catalyze that, but only 20% of Egyptians even go online. So I think that this is relevant to our discussion of money because we think of money as a technology. So we think of the already existing monetary system as some kind of technology that's coming in from the outside and is placed into our society and exists, rather than it being a set of social relations that allow it to be produced in certain ways through certain institutional structures and certain legal regimes, and that money is as much a social construct as a people's revolution in Egypt is. And I think that that will change our discussion about how we think about the already existing money as something that is social, that we do not have to accept in the way it is now, and can do things that allow it to expand and incorporate other value systems or other relationships, or relate to other currencies instead of relationships.
So the comment is that money is a social relationship, not a technology.
Yeah.
And there's one little point that came, if you look at the analogy of Egypt, Mubarak versus people, and Mubarak had to leave for the people to come in, I want to speak to the point that that is not a direct analogy for the money systems that we're speaking
Right.
of, because complementary currency is exactly a complement, where it doesn't mean either local currency or US dollar. It means that the US dollar goes only so far to meet human needs, so we're creating complementary currency systems and value systems to complement. So it means that as we evolve into new models that complement, we don't have to take out the Mubarak of money
Right.
to include the people of complementary currency. So there's an interesting opportunity for a new vision of what an analogy might look like.
And money, in essence, money defined it represents human productivity, because otherwise nobody would work for it. Think about it, by definition. It represents your productivity. And there's a social agreement that says your productivity versus my productivity is worth a certain conversion. Unfortunately, the dollar has been divorced from productivity through some of these shenanigans. So any currency which is superior in representing one's productivity will be highly competitive against the dollar. So the dollar is vulnerable, very vulnerable to a good social currency, something that's designed by the same calculus, in fact, except married to our productivity, each one of us.
So let's wrap. I know we're leaving some questions hanging, and I apologize, but we'll be here because there's a break coming up. So we'll be happy to answer. I'd like to just ask each of you, a 30-second, what would you do to what do you advise people to do today to make that bridge to the world is going to change, but what are the lessons that you have that people can apply today or tomorrow when they go back to work? We'll start with Dan.
Well, we're trying something, and we're actually deploying. It's a value game, and we're trying it with a new corporation, which is a money-making venture, and there's several to follow. So we are making it up as we go along, and so far so good. But we think that we're there. We're on the cusp, and something's going to happen this year. Is my prediction. So watch for the space, and stay close to the people that really spoke to you at this conference, and look for the integration.
Great, Greg.
We're all participating in a new reality that we're creating for civilization, for humanity. And each of us are authors of our piece of the story, and we get to write the script together for what the next wave is for value and economy and society. And it's up to us. And I encourage all of us to continue to look at, we can all write a new story together along the lines we've discussed tonight. And it's no one else's stories but our own.
My tip is identify for your business, for your community, identify some of the unique value propositions that are currently intangible. Create currencies that make them visible. I think the economics 2.0 that we need to have emerge is going to actually be more connected to the fact that it is a branch of the social sciences, and social sciences have other types of metrics other than just rational numbers, right? There are actually whole numbers, intervals, and ordinals, ranking things, and nominal metrics as well. So when you name something as certified organic, that is a kind of actual metric. It's a different kind of math, and we actually need to I think, lose a little bit of our craziness about numbers as these divisible things, which unfortunately, when you divide systems, you break them. You can't manage whole cows in terms of pounds of beef, right? It's you break the cow when you start doing that, and until we actually have metrics in which we are dealing with the appropriate levels of system wholeness, and our economics reflect that instead of only extractive numbers, we have a problem.
So I'll just close saying, kind of